Hi, everybody. Brian here. I'm going to talk about two major topics that I posted on my blog yesterday as well. So, yesterday I put up two items. One on, let me just pull up this article. I emailed this as well regarding mean reversion and random walk. Right now, being today on Saturday, April 11th, 6 sorry, 5:27 my time, p.m. Uh, what I've done is there is a situation with crypto, namely Bitcoin, all of them really. They've been type range bound for the last month. There's been very few trading opportunities, and I posted my ideas of mean reversion, and I've got articles from Quantopian and Quantinsties in there, a whole pile. And these are all my opinions on them and so on and so forth. One of them that I've been looking at, the Hearst component exponent on this, which I use, and some other ones as well. But if you got any opinions, let me know what you think of this. Again, it's on my blog, quantlabs.net/blog. Title of the article is Mean Reversion Strategy Opinion versus Random Walk. Now, this is where it gets interesting with this person. I just highlighted. Random Walk here, right at the bottom of this article, is right here. Some say it is possible to beat random walk in terms of trading. Um, that might be the case in the world of stock and other asset classes, but I've not seen that uh, from crypto, and probably the same with um, forex, unless you use like pretty high leverage to get any kind of return with forex. And the other question point was this article here at Stack Exchange, and this person's they mathematically proven that you will not get any profit beat random walks. You may want to check out that article as well. Another area to look for as a side tip, if you go on a DuckDuckGo, I find it's more or less bias and whatnot as compared to Google, and just search find mean reverting strategy ideas. Okay, so if you type that in DuckDuckGo, you might find some interesting articles. Back to the article we go. This is quite an interesting one. So this guy's pretty experienced here. I am looking into what you think, various opinions on mean reversion. Oh, that's my thought here. Okay, I'm gonna have to pause this. So here we are with the responses from what this guy stated. Let me go through this first. So this guy analyzed, it looks like, commodities and maybe stock as well. So this is what he says. I based my research around random walks. Quite interesting. So he's using Black-Scholes, Monte Carlo, 250 trading days. This is classic backtesting. I use open price and download it from Yahoo Finance. Run the historical prices through a model I coded using VBL in Excel to calculate. This is what he's calculating. Sounds like this could be options as well. Average, standard deviation, skew, and kurtosis. I use this for top-down macroeconomic analysis. This forecasts volatility, price, call, pull options for risk arbitrage. Yeah, so that's options as well. Then he uses Graham and Dodd for bottom-up analysis. Box plot, useful for 250 days with mean average. He has an interest in silver as an undervalued commodity at the moment. So I guess he assumes that silver will outperform gold. I can't state on that as I just right now focus on crypto for now. So then that brings me to this one other point here. Um, so these are classic. Let me respond to this. I've seen these techniques. These are good in Excel because you can sort them based upon what you see. I've done this with microcap a few months ago. It can be useful, but the market conditions can change. Um, so I don't know. He's got how many? He's got probably a select number of a subset of assets. Yeah, you could use this for options. Nothing wrong with it. If you identify an opportunity, trade it. You could do the same thing with what I do as well. There's no problem there. So that's not good or bad, but I do know skew and kurtosis is very useful. Standard deviation again can be used for equivalent of mean reverting. So we'll get into that now. So what I want to show here in this article regarding the two big ones, both Ethereum and Bitcoin. So in here, I've posted two postings on my Instagram. People may have difficulty seeing this. So in here, if you look at, let me see if I can blow up the image here. Okay, so this is a script I wrote. As you can see here, I'm doing it on different time periods of 15-minute data. Um, in here, I've run different time periods. It's just another way of saying it, at different bars. So here I've got, didn't quite capture it. I've done, this is the last 30 days. I did 30, 7, 5, 3, and 2. So I did the same analysis over 30 bars, 7 bars, 5, no, sorry, 30 bars, 14 bars, like 14 days. Remember, cryptocurrency does include Saturday, Sunday, so it never closes. Plus, I went right into detail of both uh, uh, 5 and 3 days. So what here is the number which is key using Hearst component. So if I do a search on how Hearst component works, it's fairly easy. You don't have to worry about how it's calculated, but essentially what it is, it's a very good indicator to give you if it's trending, mean reverting, or yeah, this is a good one for quant inst. So let's see. Okay, so here we are. So the Hearst value or the exponent will give you between 0 and 1. So if it's more than 1, essentially that tells you you have a trending market for that time series. So what I just showed you here on my Instagram is that all the numbers are less than 0.5. So 0.47, 0.47, 0.47, and 0.51. So this time period is trending, but it was very short. And that's where my other current trading model will work because it will capture profit when that uh, those two coins will trend because it's over zero point 0.5, as you can tell here, based upon this Hearst exponent. Also, if it's less than 0.5, that's saying it's mean reverting, and that's why I'm developing a mean reverting strategy for both Ethereum and Bitcoin only. Those are the two largest cryptocurrency coins out there. I don't see any real purpose in any other coin because of liquidity and volume. It just means that the price should be more stable and moving not as fast as opposed to a smaller coin that you've never heard of, like ENG, let's say, where the price moves up and it suddenly moves 10% in the span of half a millisecond. And the reason it can do that is because, or it does do that, is because there's not enough volume to keep the price at the price it's moving at, as opposed to both Bitcoin and Ethereum move at a price and stay at that price, meaning it's more stable because there's enough traders or enough demand in the market to keep that price stable. So that's why I only focus on Bitcoin and Ethereum. So back to the exponent here. So if your Hearst value is less than 0.5, it's mean reverting. And if it's exactly at 5, or sorry, if it's less than 5, it's mean reverting. If it's at 0.5, it means it's at what they call geometric Brown motion, or as they call random walk. We've already addressed that in the first post. So a random walk is rare, and can you make money at it? According to this guy, yes. In maybe it looks like in the world of in the world of commodities or stock. But crypto, that's a rare one, especially it's going to mean revert or trend or trend. Okay, so it's a said here mean reversion. You can profit 80% of the time when you get the call right. Uh, mean reverting. So when you go back to these posts that I shown, you can see here for Bitcoin, it's less than half a percent or zero point 0.5. This instance at 0.51, it's trending for a little bit, and I do recall that was like for like maybe 2 days. And the other time periods of the 7, 14, and 28 or 30 days, these are all mean reverting. But you can see how close it is to zero point 0.5, so it's mean reverting, but not extremely, probably very little. And that's why you have had that tight um, bound, range bound for the last month. So again, that's Bitcoin. And then when you look at Ethereum, but this one, it's the same response. So this one, uh, this one I believe. So this one's Ethereum on Instagram, or maybe the same. Yeah, here. So that's yeah, it's Bitcoin. The other one's probably Bitcoin is too. Looks like it's a mistake on my end. But at the end of the day, it's probably is this one Bitcoin as well? Yeah. So they're both Bitcoin. But at the end of the day, both Bitcoin and Ethereum move closely together lately. So they're all mean reverts. My whole point of this. So we'll leave it at that. And I just want to explain that via video uh, where I'm at with this and this response as well. But thanks for sending that. We shall talk to you later. Thanks for watching.